Hype has exploded higher, and what makes this move even more interesting is that the signs were there long before institutions started piling in. For a relatively young cryptocurrency, interest in hype has become extraordinary, and much of that momentum accelerated after institutional adoption entered the picture. Bitwise and 21 Shares launched the first spot and leveraged hype products, attracting over $122 million in net assets and producing one of the strongest altcoin ETF debuts we have seen. But here's the real question. Was the chart already telling us this move was coming? In this hype analysis, we break down the buy signals, market structure, and price action that signaled this rally before institutions arrived. And honestly, the clues were building for months right in front of our eyes. This is where retail traders like you and I have the advantage over big money. We don't need to allocate funds and build a position. We can act fast and hold longer. As we will shortly explain, the signs were there for retail traders to act even before institutions come in and ride on the crest of prices moving higher. From a market structure perspective, hype formed a major high on 18th September at 61.98. From there, the market collapsed lower into the 21st January low at 20.55. At the time, it looked like hype was destined to continue falling. Momentum was weak. Sellers appeared fully in control. Then the structure quietly started changing. At the end of January, hype produced three extremely strong bullish candles on 26th, 27th, and 28th January. This bullish formation is known as three white soldiers, and it often signals a significant momentum shift taking place underneath the surface. At the time, many traders probably ignored it, but the market was already starting to speak. Following a brief pullback and another rally attempt into the 3rd February high, hype slammed directly into the 200 SMA. That matters because the 200 SMA is often used by larger traders and institutions to define longer-term positional direction. February then produced another decline, but something important happened during that pullback. Price only retraced back toward January's midpoint. And when markets find support around important midpoint levels after a decline, it often signals underlying strength rather than weakness. That support became the launchpad for what eventually turned into hype's explosive rally. Before we go any further, if you enjoy this style of structured crypto trading analysis, subscribe to Crypto Trading Mastery. We publish crypto market structure breakdowns every day and help traders identify the key levels that matter before the move happens. Now, this is where the chart became even more interesting. In early March, our proprietary indicator triggered a buy setup, and when hype formed a higher low on 6th March, the structure completely changed. That was the moment the market shifted from recovery mode into a genuine uptrend. The rally that followed pushed price into a high on 18th March at 43.78 before producing another controlled pullback into the 1st April low. But notice where that support developed, directly above the 200 SMA. But not only that, when we layer on the 2026 anchor VWAP, the market structure becomes even clearer. Price was sitting above the reading. That is exactly the type of behavior strong markets often produce. Then came another breakout. On 16th April, hype pushed into a new high at 45.75. Now we officially had higher highs and higher lows, a confirmed uptrend structure. But perhaps the most important part of the rally came during mid-April, because this is where hype started accumulating directly above our Fibonacci support zone. And take a look at the weekly ranges. Here are the signs that ranges were holding and accumulation was taking place. And we knew something important was happening. If buyers could continue defending that Fibonacci support, then the probability of another expansion move higher increased dramatically. Then came 14th May, and the market delivered a textbook bullish engulfing candle directly from our Fibonacci support zone. That became one of the clearest buy confirmations during the entire move, a clear directional move based on price and momentum. Once the April high and the 2026 high were broken, hype was giving a very strong signal that price wanted to move significantly higher, and there was no stopping the strength of this uptrend. And from that point onward, the market really never looked back. The pullbacks became shallow, the rallies became aggressive, and buyers continued overwhelming sellers at almost every key support level. Even the more recent pullback into the 28th May low at 56.38 was immediately met with another strong bullish engulfing candle. That tells us buyers are still aggressively defending structure. In simple terms, bulls remain firmly in control. Now, the obvious question traders are asking is this: is it already too late to get involved? From what we are currently reading, HYPE is beginning to encounter resistance around 73.39. That may slow momentum temporarily, but structurally, we do not believe the move is finished yet. In fact, we are currently watching for a potential pullback into the 66.52 to 67.34 region. And if price action can produce another bullish setup inside that area, it may create another opportunity for buyers. Because despite the explosive move, the trend structure itself still remains extremely strong. Right now, our short-term upside target remains the psychological level of 87.87. And with HYPE currently trading around 72.38, there may still be significant upside potential remaining if momentum continues building. A quick mention before we finish: we also publish a free daily crypto trading newsletter. It's a quick 5-minute read covering Bitcoin, altcoins, and the key crypto market structures we are watching each day. The link is above and in the description. We hope this HYPE analysis has helped you. Thanks for watching, and we'll see you in the next one.